FedEx withdrew its full-year guidance that it just gave Wall Street analysts during its Q2 earnings call. This shocking and highly unusual announcement comes as the United States teeters on the brink of recession. FedEx told Wall Street analysts of significant cost-cutting measures because of what it called softness in the global shipping industry. FedEx announced the closure of 90 offices and 5 corporate headquarters buildings. They also announced a hiring freeze. First quarter revenue and earnings disappointed Wall Street analysts, falling well short of expectations. Adobe stock cratered today after the company said it will buy design software company Figma for $20 billion in cash and stock. Wall Street is clearly disappointed in this deal and punished Adobe stock severely. What does this mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. FedEx officially disavowed its full-year guidance for 2022, disappointing Wall Street analysts and the entire stock market. FedEx also announced significant cost-cutting measures, which is code speak for impending layoffs. Like so many other companies, FedEx blamed global macroeconomic factors. Global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and in the U.S., CEO Raj Subramaniam said in the release. While this performance is disappointing, we are aggressively accelerating cost reduction efforts, Subramanian continued. In an interview with CNBC's Jim Cramer on Mad Money, Subramaniam said, "I expect the economy to enter a worldwide recession." The cost-cutting measures include the closure of 90 office locations and 5 corporate headquarters offices. The company will also implement a hiring freeze, cut employee travel, and cancel a list of unspecified projects. FedEx stock lost 12% in after-hours trading after the announcement. FedEx reduced its plan for capital expenditure by $500 million to $6.3 billion for 2022. Management blamed economic weakness in Asia. They also blamed economic weakness in Europe for its disastrous quarterly results. While these factors choked shipping volume, the company management also blamed higher operating expenses. Operating income for the quarter was a disappointing $1.23 billion. Adobe announced the purchase of design software firm Figma for $20 billion. Adobe shares cratered sank 17%, which was the largest one-day loss since 2010. Founded in 2012, Figma sells cloud-based design software. Figma software enables developer collaboration in real time. It competes in the same market as Adobe XD product. Figma has a valuation of $10 billion in its last funding round just 1 year ago. Index Ventures, Greylock Partners and Kleiner Perkins are among the investors in Figma. Adobe management said that it expects more than $400 million in annual recurring revenue this year from the Figma deal. The deal values Figma at 50 times annual revenue. This is an absolutely stunning multiple considering the fact multiples for cloud software are falling dramatically. Typical multiples for premier cloud companies is just over 9. Adobe said it will integrate some of its photography and video products into the Figma platform. Adobe products include Photoshop, Illustrator, and Premiere Pro. Adobe's greatness has been rooted in our ability to create new categories and deliver cutting-edge technologies through organic innovation and inorganic acquisitions, said Adobe CEO Shantanu Narayan. The combination of Adobe and Figma is transformational and will accelerate our vision for collaborative creativity, Narayan added. Figma's CEO Dylan Field will continue to run the company as an Adobe employee. Adobe reported earnings of $3.40 per share, based on $4.43 billion in revenue. Wall Street analysts were expecting the announced financial results, but clearly think that Adobe overpaid for Figma. Adobe gave disappointing guidance for the fourth quarter. Of course, FedEx and Adobe are just the latest in a veritable parade of companies forecasting soft financial guidance. Warner Bros. Discovery disappointed Wall Street analysts last week as well. Executives have warned that the merger between Warner Media and Discovery create about $3 billion in synergies. Now 30% of employees in the advertising sales teams are expected to be laid off, sources told media outlets on Wednesday. Federal Reserve is aggressively raising interest rates. As a result, consumer discretionary spending is weakening. The worsened macroeconomic environment is pressuring media companies via lower ad spending. Warner Bros. Discovery Company has about 40,000 employees overall. Now employees are preparing for steep cuts, and some ad sales teams have already been cut. Earlier this year, the company shuttered CNN Plus and laid off hundreds of employees as part of the restructuring. Also, the European headquarters of HBO Max experienced a small layoff. As the US teeters on the brink of recession, ad sales appear to be in free fall. Warner Bros. Discovery has more than $50 billion of debt on its balance sheet. This layoff announcement comes as media and advertising companies of all sizes are reporting weak financial results. Netflix has been losing subscribers for the past 3 quarters. Meta Platforms has lost advertising revenue for the first 2 quarters in 2022. Google is also reporting weakening ad sales results. Rumors of impending layoffs at Google have been swirling since the company reported second quarter results. During his speech at the Vox Code conference in Los Angeles, Google CEO Sundar Pichai gave more details about how he has plans to rejuvenate growth at Google. Pichai is determined to run on fewer resources. Pichai has set an efficiency improvement target of 20%. A year ago, layoffs at Google seemed unthinkable. But now it is seeming inevitable. After years of unbridled headcount and salary growth, Google is facing economic challenges like never before. Like other corporate chiefs, Pichai pointed out that there is economic uncertainty about the future. Ad spending, a primary source of Google revenue, has slowed significantly. Here is the list of some of the companies that have announced layoffs in August 2022 alone. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Snap also initiated a major restructuring of their online platform. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software, has cut hundreds of positions but declined to say how many. Most job cuts are said to be in the customer service unit for U.S. customers. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce due to what they call turbulence in the cryptocurrency market. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. Walmart is cutting 200 corporate employees. The job cuts are focused on merchandising and real estate. Car giant Ford announced that it is cutting 3,000 salaried and contract workers. The job cuts are in India, Canada, and the United States. Bed Bath & Beyond, the latest meme stock, is cutting 20% of its corporate positions as part of what management calls a major restructuring. It is also closing 150 stores. Electronics retail giant Best Buy has cut hundreds of jobs in its stores across the U.S. due to what they call a challenging macroeconomic environment. Goldman Sachs has said that it is reinstating its long-standing tradition of yearly performance-based job cuts. The U.S. economy is teetering on the verge of a recession and dogged by runaway inflation. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.